Management at Mahindra Logistics. The CEO is now with us, Mr. Swaminathan. Thanks so much for taking out time for us. What has been the COVID impact on Q1? The company has reported a loss and decline in profits. What sort of a performance has Q1 been, and do you see improvement as things open up?
Expectedly, this was a very difficult quarter for us as we saw the full impact of the national lockdown in April. And a continuing impact in May and June as well, based on lockdowns in different parts and different states. So as a B2B business, very significant cessation of operations for many of our customers, both in terms of services and manufacturing. And that obviously had a trickle-down impact on us as well. And that was a dominant reason why we saw a fairly sharp decline in revenues. Despite that, I think there were a lot of positives as well. For one, our efforts on cost reduction and cost management actually showed a lot of positive results, and we were able to declare a marginally profitable EBITDA for the quarter. A lot of our work on cash flow management and receivables management actually resulted in a strong positive cash flow from operations in the quarter. So both of those were really strong things overall. Through the quarter, we actually continue to execute our strategy. So broadly, some tailwinds as well. Within the quarter, it was really three very different months, and June was a much stronger month. In fact, June, from a revenue and earnings perspective, was better than April and May together. So we ended the quarter with some good momentum, and it's something which we're hoping we can leverage on in coming quarters.
You did mention about recovery in June. How exactly do you see Q2 to perform better? What is what should investors look forward to in the coming months?
Yeah, so the pandemic's had two broad challenges, sets of challenges. The first one has been supply side challenges with shortage of trucks, drivers, and the reverse migration of labor. So towards the end of the quarter, I think we started seeing a very strong recovery, at least in our operations, where today, we have got 65% plus of our partner fleets are back to operations, and nearly 80% of our warehouses are now operating. Though demand from a supply side, there are no significant challenges there. From a demand side, which is the other set of challenges, I think some end markets have been obviously impacted more than others. So we have seen on the supply chain side, we've seen a sharper impact in automotive. Light manufacturing, discrete manufacturing, engineering. So those end markets have been impacted more, whereas our consumer, e-commerce, pharma, international freight forwarding operations, those have all been in fairly better shape. Right. So as we go over the next few months, I think we're expecting 2-3 things to really work positively for us in driving recovery. Firstly, we have seen a good trajectory or traction in order intake on the segments which are growing, e-commerce, FMCG, pharma, and so on. And we are hoping to actually get to gain leverage from that. The second thing is that we expect the farm sector has been doing better, had a strong June, and we expect that to continue in the near term. So that is something which will play out positively for us. And the third thing which is there is we expect volumes in our existing operations to start coming back as customers do start creeping up on operations, even in automotive and discrete manufacturing and so on. So those three things should potentially be strong tailwinds for us from a demand perspective with a more stable operational environment. I think the key risk for us to manage is really working through a lot of local lockdowns. There are obviously a series of regional lockdowns which create choppiness in operations and demand, and that's something which we have to work through.
Okay, the risk of local lockdowns, and they're happening pretty sporadically. This could in fact continue over the next couple of months. So how do you see the rest of FY21 shape up in terms of profits, revenues, and how will you manage this risk of local lockdowns?
So I think, as you mentioned, there are obviously a lot of moving parts right now. It's hard to crystal ball, um, you know, uh, and say very finitely what's going to happen. Now, if you look at our business, there are multiple segments to it. So local lockdowns definitely have a very large impact on our enterprise mobility business because we are providing services to IT and IT-enabled companies and large facilities on providing employee mobility. So that's definitely a big part of our business, which gets impacted heavily by local lockdowns. On the transportation side of our business, a large part of our business is actually what we call line haul, which is really movement between states. Now that got impacted very significantly during the national lockdown, but on local lockdowns, it actually doesn't get impacted so much. It does, the detentions do create, delays, do create detention issues with trucks and so on. But by and large, there are things which we can build alternate plans for. So the transportation part of the business on the line haul or the interstate movement is not very significantly impacted unless there are large scale outbreaks, which sometimes do happen. Where we see, and then on the warehousing and value added services, especially in terms of the work which we do with the e-commerce companies or consumer companies where we are providing distribution solutions, that's where we do obviously see a daily impact of volumes moving up and down because of these local lockdowns. The way those contracts are structured, we do provide services over a continuing period of time. There are minimum guaranteed volumes in those contracts, and therefore, while there is an impact on utilization, it is something which is contractually supported by us, by our business operations to a large extent. So it's really an issue of managing these things on an online basis, working with our customers and finding short-term solutions for them. And those do solve, I would say, a large number of local lockdowns. It's only when we see, substantial, shutdowns, because of sudden spikes in outbreak levels in different cities. That's actually when we see a more continuing impact of the lockdown, of the local lockdowns. Otherwise, it's something which we work with our customers and partners to manage through.
All right. Your press release mentions, stable gross margins, and of course, not to mention the company as well is cash positive. So what's the outlook on both these aspects, margins and cash flows?
So I think, as we entered into COVID, we obviously launched a series of measures to pivot the business around cash flow management. And that included a lot of work around receivables management, working with our suppliers and partners on payables, and also bringing down our overhead costs down, right? Facilities, operations, and so on. Through the quarter, we have paid all our employees fully, as we have paid our third-party associates as well through the entire lockdown. But we did control a lot of other controllable discretionary expenses. And those things at sites and otherwise allowed us to both offset the operating cost increases because of COVID, and actually do even more because we were actually able to create the headroom to preserve our overall gross margins at a percentage level despite the stop in volume. I expect that those benefits will, some part of those benefits obviously will continue to be there through the rest of this year. There will be some impact as we try to scale up operations, as we launch new sites. But some of the learnings and the cost reductions we have done, I hope will be more perennial, through the rest of this year as well. On the cash flow side, obviously, we did, work on reducing, managing some of those things, and those benefits also, as we scale up operations, we will have to infuse more working capital. As an asset-light company, we work very closely with our partners. So we will obviously have to, we'll have some rise in working capital, but we hope to be able to manage and maintain the cash flow management initiatives we have launched in the last quarter. We hope to be able to sustain a lot of that through the rest of this year.